Alright you guys, welcome back to Young Money Investments, and in today's video we're going to be talking about the top stocks that I am going to be buying and what stocks I'm going to be looking at buying put options for. 2 up, 2 down, let's get it today on Young Money Investments. Guys, so we have seen some interesting stuff going on here in the month of July. Obviously, one of the craziest things that we have seen lately is that the stock market is crushing it. Yes, it's crushing it. We are seeing the stock market really make some highs. It is not showing any signs of really, topping out. We are seeing a little bit of a consolidation here currently during this second week of July. And I want to talk about the 2 stocks that I see going up. I want to talk about the 2 stocks that I see going down and how I plan to actually play these stocks. One of the big things you'll also notice about me as a trader and an investor is that during the summer months, especially during the times between late June, July, and through August, is I'm not trading as much of those penny stocks that you'll normally see me if you go back to some of my videos back in the spring and winter time, because the liquidity and the volume really isn't there. There are little ones here and there that will pop that you can actually get into, but for the most part, a lot of my trading actually depends upon options on big boards or blue chip stocks. Those are companies that are worth billions and billions of dollars. And the reason I go with those is simply because those still have the volume there. There are still enough people trading those that there's still options and abilities to get into some good plays. Whereas with the penny stocks, there just really isn't. All right guys, so the first one that I want to be talking about is none other than ticker symbol EA, which is Electronic Arts. We're going to take a look at the charts and I'm going to explain to you why I see this as such a good benefit. If we take a look at the charts here, EA has been a very consistent stock here in this channel range of about $105 or so, all the way down to lows of about $90. $92 has also acted as some pretty good support for quite some time, kind of through here, some consolidation. But usually when you can pick it up down here in the $90 range, you are getting it at a very good price. I mean, yes, $90 to $92, that's about a 2% loss if you picked it up at $92. I don't think that's a bad option if you still pick it up here at 92, but if you can pick it up closer to $90, $91, you're picking it up at a fairly good price, honestly and truly. 91, 91.48. I think that's a pretty good pickup. Now, the reason why I am bullish, like I said, on EA is that if you do zoom in here a little bit more, you are going to see that this chart pattern or this channel pattern has been very consistent, and it offers about a gain of roughly about 12% or so. So the gain is definitely there. We're finally starting to see some of these wicks come down. If we really zoom in here, you can kind of see where it's starting to wick down to this bottom support of about $90.50. And so picking it up in this range, yes, you might not pick it up at the very bottom. We're talking about a potential for a loss or not making profit on about a 1 to 2% margin there. So not horrible. You're not always going to pick it up right at the very bottom. But my plan of attack for EA right now is to essentially do some call options and also add to my current share size that I have in EA. So picking these up, buying some call options, and obviously I like to buy them usually about a month or so out, if not a little bit more, depending on the premium that's offered. The reason being for that is these runs, especially if we again zoom in a little bit more here, these runs from lows to highs usually take 1, 2, 3, 4, 5-ish, about a week or so. Granted, that's not a long time. That's not bad. I mean, if you do notice here, these were pretty consistent. This was, it dropped down 1 day, 2 days, 3 days barely, and then we see the massive sell-off. Again, 1 day, 2 days, 3 days, 4 days, 4-ish, 5-ish days. So granted, you're not having to wait a super long time on EA, which I think is actually a really good thing. But with that being said, I like to be conservative. So most likely with my call options on EA, I'm going to be doing them for about a month out. For my shares, I can hold them for as long as I need to, but this channel has been very consistent. This sell-off was due to, concerns that Apex Legends wasn't going to be as huge of a moneymaker as they thought it would be. I still personally, like I said, believe that this channel pattern is very consistent. It's going to come back and we should be able to, waiting for a few days of a consolidation, and this is where we will most likely be coming in right here. That means you have 1, 2, 3, 4, 5, 6 days of consolidation. Right here, I'd say you have 1 sell-off day, 2, 3, 4, 5, 6, 7, 8, 9, 10, before you hit the 11th day where it sells off or starts to rebound again. So this is my hypothesis and my theory with this, guys, is we're gonna see at least 1, 2, 3, 4, 5, 6, 7. Right on here, about the 7th day, I would start. That's gonna be about 7/16 is when I would say this is probably a good opportunity to start buying. Again, you need to wait for the consolidation, make sure that this is not going to continue to sell off. That is how you are very proactive and very smart in not getting in too early. That is key, that is very, very key, especially with options, is not getting in to this run too early. If you are, if you're doing this where you're getting in too early, your options are going to start decaying. You're going to not make as much money, and that is very, very, very important when options trading. All right, you guys, next ticker symbol we are going to be talking about is none other than Tesla, or TSLA. As we have seen, it has had a massive slide down from its highs of 379 down to its lows of 176.99. Now, the reason I'm talking about this though is I want to make it very, very clear that we have had a gap to fill down. Basically what that means is we had lows here. I'm gonna zoom in really close for everyone to be able to see this. We had a gap down intraday here, and these are 4-hour candles. And then during this after hours or aftermarket spike, we have a gap close reversal basically. So what that means is this gap had to come back down and consolidate. We are finding that consolidation level right here at about that 229 price point. I personally do like the idea of buying it down here a little bit lower. The reason why I like that is because if you do take a look here on the charts, and we might even zoom this in a little bit more here, is because you can see where it has previously had lows right here of about 225. And so with those lows happening, I want to really make this clear though, with these lows happening over here at about 225, it used this as support previously. 225 to 226 has acted as a level of resistance as well. So level of resistance here, resistance, had a gap up during after hours where it was able to break through 25, came back down, basically was using this as support. Yes, it bottomed down to 222, but 222, 225, pretty much the same thing. And then we see that massive push up. I am currently seeing right here, we're seeing where this has also been another level of resistance. We're starting to see Tesla kind of hold right through here. I believe buying Tesla anywhere between 229 to 225 right through here is going to be a good buy. Profit-wise, you're looking at about a margin of potential loss if you buy at 229 of about 2%. So you're not potentially losing a whole lot of money. I think that's super crucial. You don't want to have a big margin of error, but you're never gonna nail it right at the peak. That's the thing. That's the thing. You're never gonna hit it right at that perfect spot. So if you can actually end up purchasing it somewhere in this range between 225 to 229, I believe that if you are able to see this, and I don't think 234 is gonna act as really big resistance in this continue uptrend, I think if you're able to get in here, you're going to be able to see this ride up all the way up to about 250, and I would be getting out right around 250 if you're looking for a swing in Tesla. Just my thoughts on that. All right, you guys, now we're gonna be talking about the two stocks that I say are bearish. Yes, bearish, 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 swiping down. These are two stocks that I believe that are at kind of their peaks. I had called out Apple in one of the previous videos saying that it was at the top of its channel pattern and that it was probably a time to sell. Apple was peaked out. This is another stock that I believe is actually peaked out quite a bit and is probably time to take your profits, wait for a pullback and wait for a better entry, and that is going to be none other than Facebook. So if we take a look at Facebook here on the 180-day chart, you can see where it is really starting to run up. If we zoom in here a little bit more, we're going to see kind of this was part of the channel. It was able to consolidate through here and then actually was able to run up. Now, $200 or $199, should probably get right here to $200, is going to be a major level of resistance. The reason $200 is going to act as a level of resistance is because anytime you are dealing with whole numbers, yes, whole numbers, that is a price point that psychologically in all traders' minds, that's either a good buying point or a good selling point. It's just a good level of resistance no matter what, whether it be in penny stocks, you talk about the $1 price, $3, $5, $10, all of those prices are psychologically just important numbers for people. It's easy to buy and sell at whole numbers. You're not entering in decimals or anything like that. People like whole numbers. So with that being said, we can see this ascending pattern here. We can see that Facebook has really continued to hold kind of a good, steady upward pattern, upward trend. We're seeing today actually that it's popping quite nicely. In fact, we can zoom in here even a little bit more on this, make sure that it is very nicely drawn out. But with this massive push, you know, we're seeing that it is really going to be getting to that point where we are getting close to the magical 200 level. Now, getting to this magical 200 level is going to be crucial because I believe at that point we will be seeing a pullback. Again, I would not be buying the puts necessarily right here at 198. I would wait a couple dollars more. We have no idea how long it will consolidate through here. MACD is not indicating that it needs to be a sell right now, although we are starting to see where it is essentially starting to curl over. I see it also starting to break up. We're not at a high enough RSI right now either. We're at a 64 RSI. So I would not necessarily be buying puts on Tesla or shorting Tesla, or I keep saying Tesla, Facebook. But I would keep this on watch as a potential play for put options, especially if we do see the market get a little bit of a reversal. And guys, last but certainly not least is going to be Snap or Snapchat. So taking a look at ticker symbol SNAP, we are starting to finally see this nasty behemoth that has run and run over the past 180 days, run from lows of 482 all the way to highs of 1557. That is a 218% return, guys. That is unreal, unbelievable. But I do see that this is really starting to kind of get choppy and dicey. That 15 level, really it's overbought. It really honestly and truly is overbought right now. I would not recommend getting into Snapchat. Could I be wrong? Of course I could be wrong. But the reality is taking a look at Snapchat right now, it is not at the place where it's a good buy. I do see kind of the selling. You're starting to see less buying going on, and we are seeing a nice little red candle as of today right now on Snapchat. So I highly do recommend not getting in this. I would buy some put options probably out for mid-August, if not early September on Snapchat right now. I just believe that we are going to start seeing that selling pressure, bring it back down here to the $13 price point. So if you can get in on some $14 puts, that is kind of like my magic number, and that's actually where I'm going to be looking at it. So I would recommend looking at that. It's not a buy recommendation, it's not a sell recommendation. These are just my thoughts, but that is really what I'm seeing right now currently with Snapchat. And there you have it, guys. That is going to be my 2 up, 2 down plays of the week. Please feel free to send me some messages, hit me in the comment section if you have thoughts and insights on these 4 companies actually. Like I said, I think Facebook and Snapchat definitely are companies that you might want to be getting some puts on or actually getting out of it if you are currently in it. Take your profits. There's never a bad time to take profits in a company if you are up. And then like I said, I do see a lot of value right now in EA games as well as Tesla. I think both of those have some good upside potential of about 10 to 12% each in their upside potential. And that's really it, guys. Biggest thing though, always remember, wait for the confirmation. You know, it could consolidate, and that's what you need to be careful of as a swing trader. Catch you guys in the next video. If you have any other questions, if you want to get into my private mentorship, link is down in the description below. Course is down there. Hit the thumbs up. Always love help with that. And turn that bell notification on. If you've not subscribed already, and hit that bell notification. I put out about 3 to 4 videos every single week. Sometimes it's about swing trading. Sometimes it's about shorting. Always putting good stuff out there. Catch you guys in the next video. Bye.